For today's video, I want to seriously consider this crazy idea that Bitcoin will reach $1 million a coin in a few years. It came from the world's most respected hedge fund managers, Cathie Wood, who believes that this is something we can definitely expect to happen soon. The billionaire co-founder of PayPal, Peter Thiel, agrees with her. Actually, there are so many other billionaires like Elon Musk, Jack Dorsey, Mike Novogratz, and the Winklevoss twins who all believe this crazy theory is possible. Now, before you laugh this idea off and say it's not going to happen, let me share with you some data, facts, and statistics that support this theory. Before we get into these hard, cold facts, let me welcome you to Modern Wealth. We'll be talking about this crazy idea and find out the complete story behind it. Now, let's begin. The main idea of the $1 million Bitcoin is based on another idea, which is scarcity. Now, there are only ever supposed to be 21 million Bitcoins in all of existence. But it will take us another 118 years before we mine all the Bitcoins, where the targeted year of mining it all is 2140. What's crazier is if all the world's millionaires decided to buy just one Bitcoin, they wouldn't be able to because there's not enough to go around. According to Credit Suisse, as of 2020, there are roughly 56 million millionaires around the world, which means each millionaire would only be able to buy a little over a third of a Bitcoin, which is technically wrong. That's because, as of today, there are more millionaires, and more importantly, roughly 20% of Bitcoin's entire supply has been lost forever. Something like 4 million Bitcoins will never be recovered, which means the real supply of Bitcoin is closer to 17 million, and that makes it much rarer. Right now, Bitcoin is worth about $42,000, with a market cap of about $800 billion. Here's what it's going to take for us to get to $1 million Bitcoin. We would need to 25 times our investment, and the market cap at that point would be worth closer to $20 trillion, which is an insane amount of money. Just for reference, here's what $1 billion look like next to a couch and a group of people. That's a lot of money, but it's not a trillion. Here's what $1 trillion look like next to the White House and a football field. It's also a pretty accurate representation of how much Bitcoin is worth today rounding up. But that's not exactly 20 trillion. This is what $1 trillion look like next to the Statue of Liberty and skyscrapers full of money. That's an insane amount of money credit to visual capitalists for the reference. But to go from this to that in just 8 short years seems pretty impossible. Before we move on to some of the data that came out recently, make sure to hit that like button and subscribe. We'll be getting into some bonus data later on, so make sure to stick around until the end. But now, let me share with you some data about how it might actually happen. The first thing we have to talk about is how much money it actually takes to move the price of Bitcoin, because the idea of the $1 million Bitcoin is flawed. If we're looking at it through the lens of market caps like I used to, and a lot of other people did, it does get confusing. That's because even though a market cap is supposed to tell us how much money is in the entire system, it doesn't, and that's pretty odd. All a market cap does is it takes the current supply of something and multiplies it by the current price, which is the last known sale price. That's all it does. For example, right now, Bitcoin's market cap is roughly $800 billion. This doesn't mean, though, that $800 billion worth is inside of the Bitcoin ecosystem. If something crazy happens, like Bitcoin goes to zero tomorrow, it doesn't mean that investors will lose all their money. What it's doing is taking Bitcoin's current price of $42,700 and multiplying it by the current supply outstanding, which is 19 million coins. If we were to get the implied value of $800 billion, the implication would be that if you were to sell all 19 million at $42,700, which you wouldn't, because if you were to sell all of it, you would affect the price on the way down. That's why Bitcoin's value is not dependent on its price or its market cap. A perfect example of this is the stock market. Apple's market cap right now is $2.78 trillion. The way this number is generated is it's taking all of the stocks that are available in total and multiplying them by the current price of Apple to get the mean value that Apple currently has. There's also the price-to-earnings ratio, where Apple's right now is over 28. This means investors are paying over 28 times the price of what it's earning per year. They do this for the opportunity of investing big because they expect Apple to grow and make more money in the future. It's crazy misleading how this works, but I guess it's kind of like a good magic trick. At first, it might not seem obvious, but the closer you watch, the more you realize it's simpler than it looks. Sometimes, less is actually more. Now, you can technically start a billion-dollar company with just $1. All it takes is for you to create a company with 1 billion shares outstanding and sell one share to someone else for $1. That would give you the implied value of a billion-dollar company. Since Bitcoin doesn't have a P/E ratio, because it's not stock and it's not a company, although the logic is very close, you don't actually need as much money as you think to move its price. The best evidence of this was on December 20, 2020. It all began when Tesla bought $1.5 billion worth of Bitcoin. It was then in December when it became clear whether or not if it was even possible to buy $1 billion worth of Bitcoin. And that's when people started to buy the rumor that maybe Elon was getting into Bitcoin. That's when I knew the price would skyrocket, which is exactly what ended up happening in the fourth quarter of 2020. That's when Tesla and Elon bought Bitcoin. But the world didn't officially know about it until the second filing, which was February 8, 2021. I mean, check out what happened to the price. Bitcoin opened the day of the tweet at $23,000. But by the time it was officially announced on February 8th, Bitcoin was up to $48,000. It more than doubled. It's hard to believe that in a span of a little over a month, did people really spend over $430 billion on Bitcoin to double its price? No one could pay me enough money to convince me that it happened. There is no way that happened. The real dollar amount was a lot lower, and to figure it out, it would be impossible without knowing each and every single transaction. Theoretically, though, it would be as little as 10 to 20% of its market cap. Which means instead of needing $20 trillion, we might only need $2 to $4 trillion in inflows to make $1 million Bitcoin possible. As of right now, that averages out to 96 months in the next 8 years, which, if we broke that down, would be $21 billion a month. That's still a lot of money, but it's definitely more doable than what we had before. To compare, right now, we are inflowing about $2 billion a month, and that's being very favorable to Bitcoin. All that means is that we are off by a factor of 10. It might even be impossible to get to that point in the next 8 years. Or is it? There are some catalysts that might make it happen. Please keep in mind that some of these are completely subjective, but they're relatively possible in relation to what they are. However, within the next 8 years, Bitcoin will either completely disrupt or play at least a conservative role inside these 8 major markets. The first is the remittance market. This is where we send money from one country to another, as we did to help Ukraine. This might be a bit slow, expensive, and get this, it's closed on weekends. Bitcoin is undeniably the better system that we have today. If Bitcoin can capture 50% of the remittance market, that would add roughly $300 billion to its market cap of $14,000 billion a coin. Number 2 is a big one. These are the emerging market currencies, referring to what's called the M2 supply of money. These are all things like cash, physical coins, checking and savings accounts. In other words, money that's easy to convert. The emerging part of this is referring to countries that are transitioning from development to modernization. A good example is the Chinese renminbi, the Russian ruble, the Brazilian real, the Indian rupee, and other things like that. This is where Bitcoin could be a good proposition for the store of value, especially for things that are worth investing in. Now, if Bitcoin can capture 10% of the global markets here, this would add a coin to the value of Bitcoin, and that's excluding the top 4 countries of emerging currencies. The third is the economic settlement network. This is where banks send money to each other. Interestingly, all of this happens digitally, but at some point, they'll want to settle on a final currency, which is usually the dollar. But it doesn't have to be. It could be a digital currency like Bitcoin, and if Bitcoin could capture just 25% of the market share, that would add $3.8 trillion, or $181,000 a coin. A fourth catalyst, which is also a market, is the nation-state treasury. You can think of this as the cash reserves of a country, or like its little emergency fund. And if Bitcoin can capture just 1% of the global market here, that would add another $3.8 trillion, or $181,000 a coin. A fifth catalyst is actually HNWIs, or high net worth individuals. If those people held 5% of their assets in Bitcoin, that would add another $4 trillion to the market cap of roughly $190 a coin. A sixth catalyst is institutional investment. These include people like BlackRock, and if only 2.5% of their assets were held in Bitcoin, that would add even more value. We can even consider corporate treasury bonds, where companies raise capital by creating some debt. A seventh catalyst is corporate treasury bonds, where capital and debt have a somewhat weird but perfect relationship. If only 5% of their money was held in Bitcoin, that would add $4.2 trillion to the market cap of roughly $200,000. The eighth and final catalyst would be something I like to call a golden opportunity, because it literally talks about gold. If Bitcoin can reach half of gold's market cap at $5.5 trillion, that would add more value to Bitcoin, close to almost $300,000. A lot of this is very subjective, and we can play with the math and spin the numbers however we want. But we could probably both agree that this is relatively conservative. It's not assuming that Bitcoin is going to take over the world. Now, if you agree with some or all these catalysts, let me know in the comments down below. I'd love to hear your thoughts on some of these suggestions. Do you think there is some truth to them? Or maybe you have your own suggestions. Comment down below. Moving on, altogether, the grand total market cap would be $28.5 trillion, which would imply a Bitcoin price of $1.36 million. A lot of people doubt this because it is too big. But to put that in perspective, that is still way less than the global value of the equity market. That's the stock market, which is valued at $106 trillion. That would still be much less than the global supply of M2 money, which is $123 trillion, which is still way less than the global value of the bond market. But it doesn't stop there. It's actually almost 10 times less than the global value of real estate at $220 trillion. When you put it in that perspective, $28.5 trillion doesn't sound all that impossible, especially over the next 8 years. So the next question is, should you buy Bitcoin before it hits $1 million? The answer is absolutely not. Bitcoin is obviously a bubble according to 3 in 4 professional investors from a Bank of America survey. The guys from the hit movie The Big Short think Bitcoin is a bubble. Warren Buffett and Charlie Munger also think Bitcoin is a bubble. But all of these comments are just their opinions and not really hard objective data. Instead, here are some actual useful data to help you figure that out. It's called the Mayer multiple, and it tells you Bitcoin's historical price in relation to its 200-day moving average. It doesn't tell you when to buy or when to sell, it just gives you some historical context. Right now, it's making a pretty good case for buying Bitcoin because anytime the Mayer multiple was below 2.4, that's when, historically, it's been a good time to buy. Anything above that is expensive. For some more context, as of right now, with the current price of $42,700, the Mayer multiple is 0.89. It's approaching what I like to call a historical moment. Bitcoin's average has been different from today's Mayer multiple, which is 76% of the time. So as of right now, we're in that rare period of time where Bitcoin is below its historical average. This doesn't mean you should go buy it, but it does mean that if you believe Bitcoin will reach $1 million someday, now might be a good time to start dollar cost averaging. It's kind of crazy to think about how people in 2017 were upset about buying Bitcoin at $20,000, when now it's sitting in the 40s. I feel like now we all wish we could buy Bitcoin at $20,000. And I think that's going to continue to be true with each and every cycle. By going to replace banking, it's not going to replace the dollar, and it will not replace gold. But it doesn't have to. All it needs is a little market share from a couple of different industries, which is exactly what's happening right now to get us to $1 million. I really like that everything is going exactly as it was planned. Not every huge millionaire might agree with the rate that Bitcoin is going, but I think it's safe to say it's headed in a direction that's beneficial for all of us. Thanks for watching, and if you want to learn a few more tips and tricks to handling your money, make sure to subscribe. We'll see you in the next video. Cheers!